Hello everyone, welcome to the Ichimoku daily analysis for light sweet crude oil for Thursday, September the 3rd. Well, a change of trend today, and we can see that the market has a higher high and a higher low. So we have termination of that first time frame downtrend. We are still in a second time frame downtrend. We had a peak, a trough, a lower peak, and a lower trough. So this could simply be a retracement of this first time frame downtrend. Those that are interested in Fibonacci ratios probably should be looking at some sort of a ratio here. I won't look at that in this instance because we're really concentrating on using candlesticks and Ichimoku charts. But if you are interested, I'd be looking for potential areas where this market may reverse at a Fibonacci ratio of this swing down from roughly the 73.38 level down to roughly 67. Now, the start of this first time frame uptrend, though, is not ideal. It's happened on a doji type candle. There is a very small body to this, but this candle is pretty much a doji candle where the market is open and closed at the same level. And it's roughly just below the midpoint level. And it's a very indecisive candle, although on the day we could say that the bears have some sort of moderate to very weak control of this market when the market closed. It still is a doji type candle though, so there's been very little progress made on the day between the bulls and the bears from the open to the close. And that denotes a lot of indecision for this market. It's certainly not the way that you want to see an uptrend develop. And if we compare the distance between the close and the previous close, that tells us something about how keen the buyers or the sellers are. And it tells us that the buyers weren't very keen, so it's certainly not the ideal way for the market to begin trending up. Now that doesn't mean that the trend has ended yet. The trend is still up, and we need to focus on that the market should continue trending up unless we have evidence otherwise. So the low of the current candle becomes very important for this market to begin a new first time frame downtrend, which will be part of the second time frame downtrend. So we expect that there will be termination of this uptrend for the second time frame downtrend to exert itself and continue back down. So we need to keep an eye on that low of the current candle. If the market's going to continue trending up, then we need to keep an eye on the high of the current candle. If the market does continue trending, then we have obvious resistance up around this swing high at around 73.38 if the market does trade up to there. Although the market may find potential resistance up around the Tenkan Sen here, which is at 71 and 2.5 cents. So there is potential resistance for the market to find up around that level. The market is interacting with the flat Kijun Sen at the moment, and we know that the Kijun Sen can also act as an area of support or resistance, and we can see that the market tried to trade up through there and the market sold off. So this area has held as resistance, this Kijun Sen has held as resistance for this market. If the market does trade down, then we have potential support at roughly about the $66 level from the cloud or the Kumo, and we need to be aware that the Kumo is very, very small in this area, and that means that the amount of support that the Kumo will give in that area will not be very strong. There is potential for this market to trade down substantially through that region if it's approached and if we have a bearish close down below there. If we do trade down through there, then we have some minor support around the 65 level, but that may be after if we do trade down to the cloud, that support level will probably come in within the Kumo there. So if we do trade down through the Kumo, it won't be significant. The next area that we might find support is around the $64 level and then down around the $63 level. So there is potential for a major sell-off in this market if the Kumo doesn't hold.